This is your boy Check West at introspect underscore FX, guys, and today I'm going to be demonstrating to you how exactly we can enter the markets and how to analyze the markets when trading indices. So let's get right to it, guys. So first things first, we had the setup in our office. We were supposed to actually have the setup in our office well prepared, and so we're still waiting on the installation of our TV, guys. Our installation is really giving us a problem. Yo, my bad. But we could get straight to it on our devices. I'm currently using my cell, so I will be updating you guys on the system PC. But for now, I just decided, let me just get a quick session on my cell and merge it for you guys so that you guys could get right to it. Okay, guys, so as you can see, I am somebody who uses the PC, but like I just decided, let me get onto my browser. So you guys can see me here. I'm opening my browser, and already on my saved icons and saved tabs, I already have my broker, that's Deriv Markets. I already have my broker ready. So I'm just gonna open Deriv Markets, and already it takes me to the market side. So yeah, guys, once again, this is really simple. This is not so complicated. You really wanna just apply this to your everyday trading skill. I didn't charge my phone. You wanna apply this to your everyday trading skill and learn from that and improve that. So normally I trade indices, derived indices. We've got volatility 25, 51s, we've got volatility 50, we've got volatility 75 index, we've got volatility 75 1s index. I just like volatility 75, specifically the 1 second index, because it is really simple to trade. It is not as volatile as all other indices, and just getting right to it is never really a challenge. So yeah, guys, let's let's get right to it, guys. So right now we're currently seated on the 24-hour. So normally when we're analyzing charts, it's always advisable to analyze on a lower time frame, which is the 1 hour, 30 minutes, 15 minutes, and normally analyze on the 4 hour to 1 hour is the most preferred method for most traders and so forth. But as ourselves, we don't really trade those high time frames. We really just trade, we analyze on lower time frames such as the 1 hour, and then already come up with a strategy and or a sentiment on entry. So guys, let's get straight to it. So normally, when entering into the market, you always try first by changing from the 24-hour into maybe say the 1 hour. And then we're currently on candlesticks right now, so we're currently trading off candlesticks. What we really would like to know about our candlesticks is which candlestick are we trading, what exactly is happening in the market, and how exactly do we identify this change of market, price action, or of current market demands. So normally what we do is I always switch from the candlestick chart to the bar chart. That way, it's much more clearer. I can see my open, my close. I can see my price action, and I can most definitely identify what price is currently doing at this present time. This is a 1 hour time frame. I can see what price is doing at this current point in time. Okay, guys, so let's start first with the start of the session. So I'm just gonna zoom out right now to the start of today's session. I just don't know if the period separators on my phone is active. So it seems the sessions are not divided on my phone. So I'm just gonna quickly go to session breaks on my settings session section. So I'm just gonna go settings session breaks, just so there we go, so we can see. So each and every candlestick, now that we see each and every candlestick has been made known to us in terms of today's session. You see we got the 6th there, we've got the 7th there. So today is the 7th, and we will be trading today's charts. So normally, for us to know where today's session will be ending, we normally have a calculator where we could just rush to our indicators and try and highlight the date range, price range, or the forecast of when exactly today's trades or today's bars will be finishing. But normally, just a quick analysis on our charts after switching to our candlesticks to our bar chart. We now have a very clear perspective on today's date being the 7th up until the current time, which is 25 minutes past 12. But as you can see on our chart, it's clearly saying 12. So this is today's session. So normally what we'll do is we're just gonna try and highlight. I'm gonna take my trend line here, and I'm going to just place my trend line on my chart here, just a straight line from there to there, just to make it easy for us to identify what exactly it is we're doing. And just after doing that, I'm going to name this line chart. I'm going to name it and name it as a reversal. So basically, the reversal is when price changes direction from its initial direction. As you can see from the start of the session on the 7th today, the price opened high and closed low. So we've got a bearish candlestick there, or a bear candle, a red candle, or in this case a red bar. So the red bar means that price literally opened at a very, very expensive price and dropped up until a close point at which price was much cheaper than its original buying price or open at the start of this session. And then we've got a blue bar or a green bar, which then indicates to us a reversal at which price was no longer going opening high and closing low, but instead opening low and closing high. What do we mean by this? We're basically saying that as a reproach not to the red candle that originally started the session, we have switched now to a blue candle at which now the session is changing, and we've got green candles, not blue, green candles. We've got green candles now from our point of reversal, where price reversed and formed a lower high, which we can see here. It opened and then closed high, as we can see here, and then opened here and closed high, as we can see there, and then opened low and closed high, as we can see there. Just before this was known as a miniature uptrend or a miniature continuation. So basically what we're saying here is we noticed that price simply had a continuation to the upside from its open, so we will signal that as a minor uptrend. So what we are going to do is we are just going to name our bar chart today and try and identify the types of entries and or the type of candles that we have on our chart for us to have a competitive advantage on knowing where the market might go, which direction the market is headed to, and the potential trade that we can take off of our bias. So from there, we're just going to switch to a lower high, lower high, lower high, and then from there we can see price changed and started creating a higher low for a single candle. So we're just going to name that as a change of character. Change of character is when price basically changes in the direction that it was originally going. So we're just going to name that as a change of character, where price is no longer making lower highs, or price is no longer green. It is now changing to a different color, which is basically red, right guys? So change of character is what we will name this, and then immediately after that change of character, we notice that price had a high open and a low close. So this was a change of character, and price shows us that now it wanted to intend on going and on with its high open low close, high open low close, high open low close, comma. But because price is liquid and price does have a lot of volatility, we noticed that just after this change of character, another reversal took place and price started trending in an up direction, which was a lower high. So we're just gonna mark that out as a reversal, guys. Just keep in mind that marking out what happens in the market is very, very essential, is very, very crucial when it comes to our day trading strategies, because it will help us have a competitive bias in the market. So once we've marked out that reversal, we then mark out a reversal, meaning that price had reversed and started making a lower high, made a lower high, and was expectant to make another lower high and another lower high and another lower high. But then we noticed that price changed in direction and started making higher lows. So that right there would mark it out as a change of character. So we're just going to mark that out as a change of character, guys. Once again, marking is very important, so we're just going to mark that out as a change of character, where now after this change of character, price started making a higher low, made a higher low, and as expected made another higher low, from the change of character. So price changed character from a lower high to a higher low, high open low close, changed character from a high open to a low close, changed character from a high open to a low close, changed character from a high open to a low close. Now that we have currently met the current price action, we are just going to cross check our work going backwards. So going backwards simply means that we identified that price had a high open here and potentially a low close. Before, the previous candlestick had a high open and potentially a low close. The previous candlestick had a high open and potentially a low close, and the former candlestick had a high open, potentially low close, and before a high open and potential low close. And we noticed now that price having went lower than the previous low allowed us to have what is known as a break of structure, at which after price reversing 50%, reversing from the lower high, instead of continuing in its internal direction, which was another lower high, price started making more higher lows, right? So we had a BOS, which is break of structure. That is what shows us that we had a break of structure there, and price before, or the pro forma of our price, had a change of character. From that change of character, we had a reversal. Yes, a reversal. And then from that reversal, we had a change of character when price went from lower high to higher low. That was a change of character. Price then shows a lower high. From before our change of character, price had signaled a lower high, another lower high, another lower high, indicating chance for a reversal. And yes, we have identified our reversal, at which price was making lower highs from our higher low. That is a chart, that is our reversal. So now that we are cross-checking, we noticed that from the session, or from the start of today's session, we've marked out price action and the steps what price has simply done throughout the day. So we are now going to switch back to candlesticks now, and boom guys, we now have it, a fully marked out chart with all the steps that we've followed from our break of structure. We've marked out our break of structure there, we've marked out our change of character there, we've marked out our reversal there, we've marked out our change of character, we've marked out our reversal there from the higher low, and yes guys, you know it, we've also marked out our break of structure there, our continuation. So now that we see, since our change of character showed us we had a strong break of structure, a strong rally move to the downside, this signals that price is expected to make more higher lows than it has now. So the sentiment here that we have is market is excuse me, intending to continue in a downtrend. As a result, we are going to switch back now to our bar chart and calculate our entry. Now, depending on the account size that you are working with, it is always advisable to start off by indicating on your current candlestick the point at which you wish to enter off of. As a result, the point that we wish to enter off of currently is the open of our current bearish candlestick and a stop loss of 30 points. Normally I use 40 points just to stay on the safe side, guys. It's like margin trading, but normally I always prefer using 30 points, guys. And then our stop loss goes to the lowest point our price reached during the day of today, which is there. And so now that we've identified our point at which price is expected to travel in, it means that we are expecting to enter a short position here, guys. We'll come back and check up on this trade in a bit, but we are expectant for a short position. And so the confirmation would be the wick of this candlestick here. That would be our confirmation of price entry. Settings, confirmation of entry. So we are going to wait for price to open a new candlestick and reverse up until we are in the red zone. Once we are in the red zone as price has crossed our confirmation, this is when we can now get prepared to enter with great risk management of 30 to entry and a TP of 2:14 risk to reward ratio, guys. So depending on the account size and the amount of money you're working with, it is very important to make sure that account management is put into place. And this is how we have entered into a trade, guys. So let me just check how countdown to bar close. So we've got exactly 22 minutes to the next bar, and that would then confirm if it is safe to go with this sell trade. And that is how, guys, I grew my account from a $200 to the current liquidity I'm sitting on now, which is about 10,000 pula, guys. Yes, that is how we enter the market, and that is how we trade the market for you guys. So please, guys, risk management is so important. It is very, very, very important, guys. Always make sure that you do not risk more than you can afford to lose, guys, because trading is very risky. So I'll be back, and let's wait for our analysis to play out and get our confirmation. Check Wes signing out. What's up? This is your boy Wes. Welcome to my vlog, and I will be going on and on and on and on and on this day going forward about vlogs on Wes's life, and what exactly he gets to, what he likes to do, doesn't like to do, what he does on a daily basis. I will be also live most of the time on my YouTube channel. You guys can check me out on introspect_fx. And yeah, guys, I'm looking forward to another session. Please make sure you hit that like and subscribe button. Let's get this guy to 1,000 followers, right? Alright, awesome. I'm looking forward to seeing you guys at 1,000 followers. Peace out.